Today, we're diving into the latest updates and analysis on SoFi, covering everything from current data points to market trends and more.
Hello, everyone.
Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell, so you never miss any of our uploads and also enter our giveaway. But before that, alert, this is not a financial advice video. Starting off, SoFi stock is down 0.6% as we enter the final trading hour, commonly referred to as power hour. This feels like a déjà vu moment, as we've been in this position before, with the stock hovering around $7.49. This price point represents a significant resistance level due to options trading dynamics. Interestingly, despite hitting a low of $7.31 earlier, the stock has rebounded quite well. On the other hand, the high for the day reached $7.61. There hasn't been any official news or SEC filings from SoFi today, but there was a bit of a stir yesterday related to student loan forgiveness news impacting public servants. While some might think this news affected SoFi's stock, it's more likely that broader market concerns played a bigger role in the pullback. The Fear and Greed Index has notably decreased recently, impacting stocks like SoFi. Furthermore, there's been a noticeable shift in institutional attention, not just for SoFi, but across the market. This aligns with my earlier predictions of a broad market rotation following anticipated rate cuts. However, recent market volumes haven't shown much change over the past few trading days. Despite this, the likelihood of a 25 basis point rate cut on September 18th remains high at 93.5%. For the November 1st cut, the likelihood has slightly decreased to 55.7% from 63%. It's clear that the market is struggling, with the Nasdaq down 0.68% and the S&P down as well. There's been a lot of talk about a sector-wide outage affecting major banks, but surprisingly, SoFi appears unaffected. This positions SoFi distinctively compared to traditional brick-and-mortar banks, though Wall Street still primarily views it as a bank. Short sellers have been active today, returning a small number of shares, 30.95 thousand shares to be exact, with 17.29% of the free float being shorted, equating to 179.53 million shares. Earlier in the day, shorts increased their positions by 4.1 million shares before returning a significant portion. The average cost to borrow shares stands at 0.96%. I expect short sellers to be particularly active in the next hour, aiming to keep SoFi's stock below $7.50. If the stock closes at or above this strike price, it would be considered in the money for options.
Speaking of options,
There's a notable amount of trading activity today, $3.8 million in calls and $1.5 million in puts. Despite being lower in dollar value compared to recent days, 46% of today's options are optimistic and bullish. This indicates a positive sentiment among traders, especially for strike prices around $7.50 to $8, set for July 26th. This could signify expectations for another upward run after a period of consolidation. Looking at the open interest for call options, there are significant positions at various strike prices: $12,000 at $6.50, $30,000 at $7, and $25,000 at $7.50. This suggests potential upward pressure if these options move into the money. Even if SoFi doesn't close above $7.50, the large number of in-the-money options should lead to a buying surge on Monday, with market makers potentially purchasing around 4.5 million shares. Some might wonder why this buying typically happens on Mondays. It's primarily because trading volumes are much lower during after-hours and pre-market sessions. Covering large positions during these times could cause dramatic price increases. Hence, market makers prefer to cover during regular trading hours when liquidity is higher. In terms of technical analysis, SoFi's stock has shown some consolidation above key moving averages, like the 150-day moving average. The stochastic indicator at 86 suggests the stock is somewhat overbought, with a bearish deviation forming. Retail investors appear to be exiting, with much of today's volume likely driven by shorts and algorithmic trading, rather than institutional investors. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.